This week, we are talking livestock slaughter and cattle on feed numbers. Welcome to the weekly livestock market update on Brownfield. I'm your host, Meghan Grebner, with us as always to talk all things markets. Livestock economist Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
We have plenty to talk about this week, and we will break down those reports coming up. But first, let's recap what happened this week in the markets.
Yeah, starting on the cattle side this week, those live fed steers were about 80 cents higher this week. We also saw feeder cattle that were $2 to $6 higher this week. I think as some of that wheat got moisture the last couple of weeks, we've certainly seen feeder cattle prices that have moved higher. On the futures side, the December live cattle futures contract was up $3.80 this week, and the January feeder cattle contract was up $7.55 on the week. It's up $13 over the last 2 weeks, so it's been pretty strong on that feeder cattle side. Choice box beef this week was $1.20 higher. Stronger ribs really led the way on that higher choice box beef price. On the hog side, cash barrels and gilts were down $2 and a nickel this week. The December lean hog futures contract was up $2.25. The pork cutout value was down $3.30 this week. That was really led by what was weaker bellies this week.
Scott, as we take a look at what's going on specifically on both the cattle and the hog side of things, how much is this seasonality and demand and kind of how things are playing out in terms of what's been going on in markets?
Yeah, so I think we have both going on a little bit, Megan. You know, we typically would talk about the fourth quarter of a year being maybe some of the lowest hog prices that we would see for the year just because of seasonality. I think we do have a lot of back and forth on the demand side. Reports that give us demand strength, if you will, and others that are more perhaps not as strong in terms of that demand side. So I think, we're balancing very close on that head of a pin, and it doesn't take much to move us either direction. And I think that's what we're seeing with a lot of this move around in markets.
It's really been interesting watching on the pork side of things, the demand element overall. There's been a couple of, I would say, one-off weeks as we take a look at like weekly export sales where things have pulled back some, but overall it's been fairly strong. It seems like it's that domestic demand picture that's seen a lot more inconsistency lately.
Yeah, I think you're right. And I'll say, although pork cutout value down $3.30 this week, that still puts it $9.20 over where it was a year ago. So we want to keep in mind, although we've had some volatility, on average, we're running above year ago levels, which hopefully continues to give us hog prices that are higher as well.
All right, let's take a look at slaughter numbers. As we take a look at both cattle and hogs, talk to me about what you're seeing in those numbers and what you're pulling from there.
Yeah, so number one, I just remind us that we got Thanksgiving week embedded in some of these numbers, not so much this year, but in comparison to last year. So USDA tells us for the week ending November 23rd, a run of 631,000 head of cattle. So a fairly hefty run this week. I think that's a pre-Thanksgiving week run, trying to get more cattle in place. That's 25,000 head more than we did last week, and it's 97,000 head more than we did for the same week a year ago, Thanksgiving falling in here. On the hog side, a run of 2.565 million head of hogs this week. That's 73,000 less than what we did last week, but 344,000 more than we did a year ago.
When we take a look at the hog numbers, are we concerned about available supplies of market-ready hogs, or is it just more the time of year?
Yes, I don't think we're too concerned about those runs right now. Perhaps we're in a little better shape on the supply side than we would have thought by the time we got here 3 or 4 months ago. But generally, I think, although down this week relative to where we were last week, that's still a pretty good run of hogs at 2.565 million head.
How are we running year over year?
Yes, on the cattle side, cattle slaughter down 3.3% year to date, and hog slaughter is up 1.2% year to date, Megan.
All right, Scott, let's get into these numbers. Livestock slaughter report out this week as we take a look at both beef and hog production. Let's start on the beef side of things.
Yeah, so big beef number, and not surprising relative to what we were seeing starting to happen, but certainly showed up in the livestock slaughter numbers that we got this week. Beef production, 2.5 billion pounds, a little less than that, but rounds to 2.5 billion pounds. That's 5.4% higher than the 2.3 billion pounds we produced in October of 2023. So more production. I'll say when you look at the year-to-date side, we're actually now running 0.3% above year-to-date this year relative to the same period in 2023. Who would have thought we would have been talking about higher beef production even when we started this year relative to what we were doing in 2023. Now, cattle weights continue to stay high, 868 pound cattle dressed weight, 4.2% above where we were a year ago, which has a lot to do with where we sit today. But also total cattle slaughter here for October was 1.2% above October of 2023.
Do you want to talk pork production before we get into beef cow slaughter, or do you want to go right into beef cow slaughter?
Well, so we'll talk pork production and then come back to beef cow slaughter for a minute. Just like for beef production, 2.5 billion pounds of pork produced in October of 2024. That's 5.2% above October of 2023. So beef production and pork production certainly are running similarly in terms of the October to October comparison. And when you look at year to date, we're up 2.5% in pork production. I think some would have been worried that 2.5% increase would have put hog prices lower than where we sit today. Hog slaughter up 4.3% in October of 2024 relative to last year. Weights up 2 pounds on the hog side, 0.9%. So heavier weights, more slaughter gets us that 5.2% increase in production.
All right, let's get into beef cow slaughter. I'm going to steal a little bit of your thunder, but I'm going to let you get into the meat and the fun stuff about it. Beef cow slaughter down 21% compared to October of 2023. I think that number is a little shocking when we just say it, but there's some other things that go behind it. So talk to me a little bit about what this number specifically says for you and maybe what that means overall.
Yeah, so number one, are we surprised that lean beef supplies or lean beef prices have been so strong when we've seen what's been much weaker beef cow slaughter year to date, down nearly 17%, roughly 500,000 head less beef cow slaughter year to date than what we did in 2023. I turn to the following though. So we have enough information to kind of begin to talk about. Let's look at January through October federally inspected beef cow slaughter as a percentage of that beginning beef cow inventory. I think that's a good way to look at it, knowing we have fewer beef cows when we started the year. So I'll go back to 2015. So one of the years that we know we were expanding the herd. January through October, beef cow slaughter in 2015 relative to beginning inventory was running just a little more than 6%. All right, so that's where I say you get below 7%, we're building. You get 7.5%, we may be holding beef cows longer, trying to grow the herd. When you look at 2024, we're sitting at roughly just a little less than 8.5%. So that compares in 2022 where we were up at 11%. So we're moving in this direction where we're slaughtering a smaller percentage of the beginning inventory through the first 10 months of this year. But despite that big decline, it still looks like to me we haven't necessarily been holding enough beef cows back to grow the herd. We're getting closer, but we're not there yet. We still lack 1% or so before we're going to get there.
I have a feeling this may not change much. We only have a month left, but I mean, as we get into even the first part of 2025, depending, how much do you think is weather going to come into a factor here?
So I go a lot. I think when you try to take the bigger picture here for a minute, weather's played a big role in providing uncertainty to the point that some producers have said, you know what, I'm just going to hold here for a minute. I want to make sure I've got adequate moisture. And although I think we got in late July and felt like we were in good shape, then the spigot turned off for a lot of cattle country. And I think that made folks wait yet again. So I think weather's played a big role. I'll still say costs are still high. Feed costs have come down, but all the other costs that cow-calf producers might face today have stayed relatively high. So although we've got very high cattle prices relative to history, maybe we don't have record profitability yet. We're getting closer, but not there yet. So I think we need some green grass come early next spring, and folks feeling like moisture is in better shape before I think we get any strong signals of expansion. And even then, it's going to take us a while once we begin that process to talk about actually increases in numbers. Now, I say that and I go, you look at what we've done this year, and no one would have suggested we'd be nearly as close to 2023 production levels as we've been so far this year.
All right, cattle on feed numbers out this afternoon. Scott, as you take a look at that November report, talk to me a little bit about what your takeaway was and what this means as we think about placements and long-term impact on the U.S. cattle herd.
Yeah, so pre-report estimates and what we got out of the report today came in, frankly, fairly close to each other. On feed November 1, we got 100.3% of a year ago, so still running fairly high in terms of inventory. 11, right at 12 million head of on feed November 1. Placements in October, the report told us we were up 105.3% of a year ago. That is a little higher than the midpoint of the pre-report estimate of 103.3. But we're still seem to be finding cattle to place despite, anecdotally I hear a lot of folks saying numbers are getting tighter. So we'll see. I just as we talked about beef cow slaughter, I think it's interesting if you look at January 1 feeder cattle supplies that were outside of feed yards, and you look at then the percentage of those that have been placed in January through October placement numbers. That line's way off of any kind of historical standards. If you look at the ratio of those two things, we've probably historically been running in that 72% of January 1 feeder cattle supplies outside of feed yards were placed in that first 10 months. We're now sitting at closer to 78%. So we seem to be placing a lot more of that beginning year inventory. Now, that's not the only place we get cattle placements, but it just reminds me to say that can't continue to go up like it has forever. And what happens when it quits going up? Do we really get tight in cattle inventory? I've kind of batted this question back and forth about cattle supplies in 2025, and will they amaze us with how high they are relative to what we might have expected in 2024. This placement and cattle on feed report generally tell me, hey, we're going to be fine in terms of beef supplies here in the early part of 2025. We're now far enough into this to know we're continuing to see feed yards that stay relatively full.
It's later in 2025. I think we might be concerned.
Yeah. So I think that's a good point for folks. This won't be gradual, I don't believe. And so calling the downturn gets really hard, and many were calling for this downturn, and I'll put myself in that camp a little bit much sooner, and it still hasn't occurred. When it does, I think it will be fairly significant. So let's make sure we understand how much things could change. In a heartbeat, we'll be back to tight supplies, and will demand be able to continue to be strong given the kind of record prices that might come from that.
Plenty to keep an eye on as we head into the new year. Scott, it's always great to see you.
Likewise, Megan.
As you look ahead to next week, cold storage, outlook for U.S. trade, and then also restaurant performance index in the holiday shortened week. What are you looking for there?
Yeah, so I think the big ones, so restaurant performance index, it's been moving in the right direction, but still been in the contraction phase. Do we continue to see it moving in the right direction? Seems like to me we're seeing a lot more information or news out there of consumers getting tired of very high food prices. How's that affect this away from home component of food consumption, if you will? And then, of course, ag trade, what's been a tougher time in some commodities. I'll take beef, just given the record high prices that we've seen. How's that affect the outlook for trade as we look ahead?
Plenty for us to chat about next week. Have a happy Thanksgiving.
Yeah, likewise, Megan.
We will talk to you then. To have our weekly livestock market update delivered to your email box every Saturday morning, go to brownfieldagnews.com. You can also submit questions, comments, and for updates of what happens every day in the commodity markets, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.